Good morning. Okay, yeah, you can see me. Good. YouTube, I am on my channel. It says I'm live. Hit the thumbs up button. And I'm going to hit the do not disturb. Put that on. Live chat. Okay. I got a pretty good show for you today. Pretty good. But look at Rocket. Let's look at Rocket and FinViz. They're making money. It's expensive, but Rocket Mortgage downgrade $7. You're trading at $8.86. The average price target is $7.69. Mortgage shift could be catalyst for Rocket. Boy, look at that. All the way since October. The CEO's been quietly every week, every day for a while, putting in $200,000. That's an interesting one. This is So let me just I looked at the headline. I didn't look at the Jeffries hold with $9 price target. Shares have rose 4.3. The analysts examined whether Rocket could repeat its success in mortgage refinances with mortgages for purchase. Refinancing was hot. There's a potential changes. Rocket could achieve share gains through acquisitions. Challenging environment last year marked a period of transition for Rocket. We right-sized our business to respond to a challenging. It's an interesting one. Here's, the same guy that says it's a challenging. He's buying $200,000 worth of stock every day from October 12th to December 16th. And then he's continuing the buys at about $200,000. That is not dollar cost averaging, my friends. That is just outright a philosophy that the business is too cheap. But he was buying at 6 and 7 and 8. And you're trading at 8.86. It's an interesting one. I'll bring that one up. Starwood. I like Starwood. Has this been beaten down enough? It's below its 200-day. Let's look at STWD. 11.39%. This is the trust. Okay, 11.39% dividend. Downgrade. Average price target is 23. You're trading at 15. I'll bring this one up. STWD. These are ones that I personally watch. These are not ones that I would recommend, but DQ, I am such a fan of the freaking Blizzard. That is not what this is, but DQ, wow. Beyond Meat was way up, by the way, on Friday in the morning, 6.53%. I'm still not a fan. I mean, I love the FCNCA. $16 billion discount. That's big, by the way, that this First Citizens Bank shares is buying Silicon Valley assets at a $16 billion discount. I mean, these guys' stock just went up 42% because they got assets at a $16 billion discount. They went up $247. Here. FCNCA. This is it. First Citizens Bank shares. They're trading at 8.30 right now. Which, by the way, look at that. Look at that. Yeah, you're down there. You know where you go? All the way up here. It crosses the 200-day in one shot. That's how much these banks. This is crazy. And look at their earnings per share, $20.94. I mean, these guys are just killing it. Killing it. Let's look at the long term. We'll look at the weekly. Yeah. They traded under the 200-day. When was the last time they did COVID? Last time they traded under the 200-day. So, I'm continuing to say buy the big banks, but okay, let's go back to our scan. Starwood. Do I want PayPal? I think Square is the one that... Did PayPal cover this? It looks like they did. So this one would be in the crosshairs at 84. That'd be a big move. With a good earnings report, which, by the way, they very well might have, but you don't know. Bank of America up 2%. Your boy bought at 30. It's at 27.79. I'm going to buy more, I think. I'm still not 100% certain that it's not a risk, but it is what it is. Atlassian, nah, we're not going to go with that one. Okay, let's go to our ARC. And if you're here on YouTube, just hit the thumbs up button. Make sure you're subscribed. I am going to record my podcast. This is Peloton is up near 10. I should say it's down near 10. I mean, their last earnings, this one was at 17, so it's just been a slide. I think I recommended this back in December. Back here at about 8, doubled to 17. They did a lot right. The problem is they're doing a lot wrong. Here's the thing: if we can bring it up, I like it. I'll talk about it. I hate defense companies. I hate war companies. I'm just not a fan of war. Okay, let's go to the Dow 30, which I think Johnson & Johnson is going to cross up. And I think that's going to be it, to be honest. I think Johnson & Johnson the only one of the 30 that's going to cross. Yep. We already have that one. Let's go to NASDAQ 100. Picard. That one crossed up before. It's just gotten messy. Team Atlassian. Walgreen Boots. That's just a messy restructuring. O'Reilly Auto Parts. Not a fan of the used car stuff right now. Maybe in a week or two. Let's look at the S&P. We only have a couple of cross-ups. UNP, Union Pacific. This one might be making a little. Let's see what they're... 16. Let's look at the other railroads. PE 20. So 16 is not bad for Union Pacific. Let's go back to Union Pacific. 2.76%, down 8% year to date. Average price target is €222, 188. Sale, only 532,000 from an EVP. There was a buy of 259,000 from at 188. These buys at 124 were great buys. Oh, those are options. Okay. The sale by Kenyetta, EVP Marketing and Sales, for $1 million at $250. Great sale, and back in April, because you've been sliding ever since. The options exercise by France at 161. Options of $9 million. Huh. Not bad. Not bad at all. But I just don't like you. Railroads right now, it's kind of hands off. So let's go to our energy sector. And I doubt there's much of anything worthwhile here. We did have Arch, which is coal, which has been kind of fluttering down there. Enbridge. Don't like that one. Okay, I think that's it. So without further ado, let's go to SPY. I wanted to look at something else. We'll look at SPY. QQQ. I'm looking back at my notes from last week. Coin received a Wells notice. God, look at all those scans. Okay, I've got my crypto. Hey, VRO. I'm just putting together. I'm probably going to get started here in a couple of minutes. We're going to go to our strategy tester, and we're going to do the 4-hour. Let's hope that whatever happened over last week. SPY is still in a buy, still hanging on to the 200-day there from a weekly perspective. Still looks positive. I mean, it hasn't broken the October lows down below the 200-day. So from a daily perspective, we are still above the 200-day at 395. QQQ. Bum, bum, bum. Remember, if you're listening on YouTube, hit the thumbs up button and subscribe. Come on, hit me with a subscribe. Doesn't hurt you. I mostly do live videos. I actually almost did a video this weekend, but I did not. See, you still got a positive. I mean, even if you're pulling this back and you're saying from January of last year, where's your trend line? This is... let me see if I can pull back. This is the 4-hour. We'll go to the daily. We'll go to the daily where everybody's going to be looking at this. And we'll go back to January of 2022. And we'll draw our channel. This is the first day in January right here. We'll go from the highs and we'll touch 3 points. And then we'll go to the lows and we'll touch 3 points. You've broken out. It's clear you've broken out. So What I would do is I would look at it from a little shorter perspective. And when you're going here, you're going to touch 3 points right about there. And then when you go to the highs, you're going to make sure you touch 3 points. You're only midway. Let's do this again. Let's go back to the January. I'm going to add this back in. Going to add that back in to look at it. Boom, boom. Because here you've got your long-term trend is this trading range that is down here, which is unrealistic. If you're still going down, it's just unrealistic to think that we're going to go below this range at 260 on the Qs. It's not realistic that you're going to get below 260. From a value standpoint, you're going to get a ton of money coming in at that point. I think even at 300, you'd get a ton of money coming in. The realistic point is, hey, here's the short-term trend, and there's the long-term trend. So let's see if we run this, if that stays. No, it does not. So it's on the daily. That'll stay on the daily. Okay. Okay, I'm gonna start the podcast now. Oh, I gotta take a sip of water. I did clean up my my desk, so it's completely uncluttered. Good morning. It's Monday, March 27th. And I hope you had a good weekend. Your boy did some exercise on Saturday. I think I did a total of like 3,000 steps yesterday, which meant that I pretty much stayed in the house. I watched Heist. If you guys haven't seen Heist on Netflix, it's a good one. And by the way, I am still long Netflix in my parents' account. So under 300, telling you. Let's take a look at there's some big news out there. Big news on the banks. We'll take a look at that. But I wanted to take a look at SPY and QQQ. We're still holding on to the 200-day right here at 394. You're trading in pre-market at 398. Looks like it's going to get above the 300-day. So you're just kind of trading in this range. And you're trading in this range just because nobody knows what the F is going on. Are the banks going under? Is the U.S. economy going into complete chaos right now? Is Jerome Powell going to continue to raise? Are we going to go into a standstill? Are the regional banks failing? Do we have a bigger banking situation where the government's going to need to bail us out? Blah, blah, blah. Nobody knows what's going on. But the charts kind of tell us that, hey, there's a support level down here at about 370. We went over it last week at about 370. And you've got clear resistance at about 4,000 on the S&P. And then for SPY, that would be 400. Just remember, SPY is just, you take the S&P and you just take the last digit off. It's 1/10 of it. So nobody really knows what's going on. But SPY, you're still in this trade on the 4-hour algorithm. 395.11, you're still in this. 398.28 is what you're trading at. That's from March 16th, that buy in the algorithm. So personally, I think you still be patient. You can trade things. I don't think I'm making too many long entries for long term. I did buy Bank of America. I did buy more Google under 200. I did buy Netflix under 300. All of those things that kind of have gotten in there. Roblox is at 44. We talk about Uber, trying to get that under 30. It's at 31. Just doesn't seem to want to come down. Walmart around 140 is a great buy. We'll talk about Apple a little bit. I've got a lot of coverage of Apple that I want to just kind of mention. But yeah, so SPY, you're going to play your triple levered ETFs up or down, doing them on day trade. Just make sure you're scalping and make sure you're watching the charts. If you've got a full-time job, do not scalp those triple levered ETFs. Maybe buy SPY, maybe buy QQQ. I looked at QQQ a little bit on YouTube Live, and here's where we are. The algorithm has you in at 294.71. You're at 310. So you're making a fairly good move. Here, 294, you only need 29 points to get your 10%. You're up at what? Almost 20? So 10% scalp on the Qs. That's a great move. You've got gaps up that need to be covered. You don't have any gaps down that need to be covered. So my guess is, again, are we in a bull market or a bear market? Well, I took a look at the daily, and I put some channels. This is a daily chart. And so I decided, okay, for the top realm, I'm going to touch 3 points. This is from January of last year, not January of this year. This covers about, 15 months now? So I just covered 3 points. On the bottom, I covered 3 points. There's your channel. So we're still in a downward trend. We're not in an upward trend from last January. But if you go from the lows of October, if you just take it from January, we're in an upward trend. And we're only in the middle of that upward trend. We're kind of in the just this channel of, hey, where are we going? Well, if we're going up, you're going to get up here into the 320s, 330s. So it's your choice where we're going, where you think we're going, I should say. But for long term, let's take a look at the weekly. The weekly on the Qs, you're just touching the 200-day. When's the last time you even got close to the 200-day? Was COVID. This goes all the way back to 2014. This chart is a weekly chart going back to 2014. So in my mind, with the RSI kind of a little bit low, it's not super low. It's in 57. It's in no man's land. It's up there. Over here, it was at 16. You could, on March 16th, it was at, 28. You could have bought there thinking, we're going to go into an upturn. Well, we did go into an upturn. The RSI typically identifies, hey, there's going to be more buyers showing up because it's oversold. Well, this nice little move here from October in the MACD has kind of been a signal that we're getting up there. Are we going to move down? I think there's going to be there's more catalysts for moving down than there are moving up. And so, play your TQQQ if you want a long term. Do we get back up here into the January of 2022 where we were at 400 on the Qs? Maybe, but you're going to have to do a lot of work on the economy to get back there. A lot of work on the economy. So Schwab had a really, really bad Friday. We're talking about a little bit of a crash on Friday. Came down. It's trading at 55 right now. Remember, there's a whole lot of buying at 59 from insiders. So that's kind of where I'm at is I think 59, under 59, I think you're still getting a good deal. I think this is a $65 stock. Schwab ain't going anywhere. If this gets down to about 50 or even 45, I think JP Morgan or Goldman Sachs comes in and says, you know what? We're going to buy a ton of you and we're basically going to take you over, or we're going to make a bid. And the board's going to have to listen to the bid. And the $65 is probably the bid. Schwab is a business that people want. It's not in jeopardy. There are some systemic problems within the bank, way above my head, above my pay grade level. But I do think that around this level, you're fine. I mean, look at the long term. If we go back to a weekly of this one, do you think that this is as bad as we were back in COVID? I mean, COVID, it went down to about 29, where people thought the world was coming to an end. But has this bank done better than what we were in January of 2020 when COVID first started? Hell yeah, it's better. But it's trading right about that range. So I think this one's good. FRC over the weekend, it's up in pre-market. It is up 30% in pre-market. It's at 16.16. This one has you in at 14.18. So if you're at 16 and you bought at 14, you're doing really, really well. If you bought at 15 and you're at 16, you're doing really, really well. Every price that I said last week, you'd be in the positive. I haven't mentioned 16. I mentioned 14. I mentioned 15. I thought you were fine in either one of those. The news over the weekend is that they probably are getting backstopped even further. So DPST, that's going to bring DPST up. Where are you at in this one? You're up 11% in pre-market at 843. I said if you get this anywhere in the 8s, you're still in the 890 trade on the algorithm. If you get anywhere in the 7s, you're doing fantastic. If you get in at 8, you're doing okay. 1143, 843 is where you're at. You've got this gap up here at 11. I think you're heading back up there for 11. I think that's it. There was news, FCNCA, which is First Citizens. They're buying the Silicon Valley SVB assets at a $16 billion discount. That tells me nobody wanted to freaking touch those assets. Nobody wanted to touch them, but they're getting an enormous discount. So what did that do for the First Citizens bank share? First Citizens is up 50%, not 1.5, it's 50%. This was a stock that last week, March 21st, the algorithm said get in at 590. I wasn't even watching it. Honestly, this bank wasn't even on my radar. But it closed Friday at 582. You know where it's at right now? 875. It's not even on this chart. I got to go back further to see where in the world this one was ever trading at 875. Here, if you look at my screen right now, 875. It is up there. This is going to put in multiple tops right here, right at about 875. Any reaction in the market is an overreaction. But when you're able to buy assets at a $16 billion discount, huge for this stock. Am I getting in it? Hell no, I ain't getting in it. It is right now just look at the earnings per share on this one. $18 per share, $16 per share. You go up to $20 per share, $20 per share. And you were just hovering around this, and then boom, the banking crisis has. And you know what? If you acted quickly, you did well. Let's talk about, I said we'd talk about Apple. We're going to talk about Apple. Lots of coverage of the AR/VR headset this weekend. I am not a fan of this. I do think it's something that they need to do. One thing that I read is, hey, Apple needs to get into AR/VR because Meta's already in there. Google's already in there. There's a lot. Amazon, I think Amazon has some AR/VR stuff, but it's mostly secondary kind of companies. It's nothing that's major. But Apple doesn't want to be Microsoft. Remember, you guys may be too young, but back in the late 90s, Microsoft was big. Steve Ballmer, I think, was the CEO, and he said, we're going to do a Microsoft phone. And boom, it crashed. I mean, it was the worst freaking phone. And then Apple comes out with the iPhone, and boom, that built Apple's business. Well, Apple doesn't want to be Microsoft and miss the AR/VR stuff. So they're going to launch this. It was debuted to management last week at the Steve Jobs Theater. It was not an overwhelming success. It didn't fail. There was nothing of it. It's just nobody was super excited about it. I think there's rumors that they're launching some entertainment with Jon Favreau as a director for the headset. I will tell you, I am a fan of getting a headset, putting it on your head, and basically getting on a plane and having your own personal screen so that you're not bothered by anybody. There's no light that comes in. You can put on your noise-canceling headphones, cover them up, blah, blah, blah. That's what I'm a fan of for VR, AR. That's the only thing that I'm a fan of it. But here's the thing. The rumored retail price is $3,000. Is your boy paying $3,000 for a freaking headset? Hell no, I ain't paying that. But I think Apple doesn't want to make this a consumer success like the iPhone. Hey, we're going to sell tons of them. They want to sell a specific amount. They want to figure out what the market is for an AR/VR headset. It's still expensive. You can bet that this is going to be a category leader as far as sensors, as far as innovation, as far as things of that sort. I just don't know who's going to buy it. For $3,000, you're going to get some rich trust fund kid who's going to buy this one. But Apple, I continue to say, in pre-market, it's trading at 159. I think anything at 150 is a decent price for this. I think you'll be able to get this at 140 at some point in time this year. I also think you might have a chance at 130. I don't think you have a chance at 120s again. I just don't. If you do, kudos to you. It's a great buy-in. I am not selling anymore. I am not buying anymore. I am definitely not buying up here. You can see the ascending triangle that has formed. It's broken out above that. So it's a little bit dangerous to buy at these levels. Even the PE, if you go and look at the PE, it's at 27. That's a little bit expensive. I mean, year to date, it's up 23%. But over 1 year, you're down 5%. So at this time last year, let's take a look. Let's take a look at a long-term one. We'll look at a weekly. You're up here. And where was last year? Last year was right here. You were trading at about 137, 149. Trading at 160 right now. The October lows, when you got down to the 120s, it was a great time to buy. Here's the thing. 2018 was the worst time. It got, touched the 200-day. Down here, 2000. This was the time when they were raising rates and they made a mistake, and then they took those rate increases back, and you were off to the races until COVID. Then you were off to the races again, and you've just been off to the races. There is no reason to think that a 120 price point or a 140 price point isn't a bad mark for this one. So Apple, I continue to say, I add to it every time they have a dividend. Caterpillar downgraded on risks of the economy. This one's going to open up down a little bit at 214. I think I bought this one around 250 or so. I bought one share. Not much at all. But this was a weekly stock picks. At that level, if you held on, you're like me. But I bought a couple of shares. I think it'll get back up to this level at some point in time. It's just expensive for what it is. With the risk in the economy. Risk in China actually, buying Caterpillar stuff. But with the infrastructure moves, I think Caterpillar is a good one. Roku was upgraded by some firm. I'll take a look. But take a look. It got you out on Friday with a 7% loss. I think if you're buying this one, I think if you're buying in the 50s, you're getting a good price. I think if you're buying in the 40s, you're getting a great price. I think if you're buying in the 60s, you're getting a decent price. Because look at this chart. Again, mind you, the algorithm does not have you in. I would buy in the 50s if I were buying. But you've seen a little bit of comeback here from 39. I mean, if we look at some of the fundamentals on FinViz, 47% up year to date. They're not making money. They will make money. These guys, they're just kind of going through their business. Here's the upgrade. Susquehanna, neutral to positive, $75 price target. So the average price target is 68. Like I said, if you get this in the 50s, I think you're good. I think you're fine on this one. CRM, Salesforce, they avoided a proxy fight. So they're fine. Square. I wanted to talk about Square because I said Friday when the Hindenburg, I think it was Friday or Thursday, when the Hindenburg research came out, I said any reaction is an overreaction. And I said if you can get this in the 60s, you're fine. You're trading at $60. It has come out with all the articles that I read over the weekend. The reality of this, the story from Hindenburg is they probably got their short in. They probably bought up here at $70 or $80, and they've gotten their short down to 60. I think it puts in a decent bottom here at 60. I just don't believe that this company is as bad as they say. Now, it is expensive. Price to sales 2.1. Your forward PE is 24. You're down 3% year to date. You're down 55% over 1 year. I still own a ton of this. You are 60% below your 52-week high of 149. You're only 18% above your 52-week low. Your 52-week low is 51. I mean, how much is, your average price target on this one is 94. 94. So I do think that anything in the 50s, you're probably doing fine. You can see there's been a lot of sales, Square lead. I mean, that's a lot of money from this Square lead. Alyssa Henry, or Henry Alyssa, not sure which one. But you can see, what, $20 million right there? A ton of them from her, basically in January, February, and March. And she sold a bunch back here too. So you're seeing a bunch of sales, no real buys. We'll talk about some buys going in next. My weekly stock pick, talking about my weekly stock pick. This week, it's McDonald's. McDonald's is an interesting one. The algorithm has you in at 265. You're trading at 272 right now. It's kind of in no man's land in the RSI. It's at 58. The ex-dividend gate came up on February 28th. It is fairly expensive. If you ever do road trips, you know McDonald's is at every freaking rest stop. It is the easiest app. I think it's one of the best apps for food because it's so nice and easy. Pay with the Apple Pay, blah, blah, blah. January 4th, Wells Fargo initiated coverage with $280 price target, trading at 271. You're only 3% below your 52-week high. Your performance year to date, you're up 2%. Over 1 year, you're up 14%. In a market like this, over 1 year, you're up 14%. That's a good and well-run company. You can see there's some sales from the president and CEO February 23rd at 267, $1 million. President and CEO sells $1 million worth. I mean, that's a pool in the backyard for him. The sale was at 267. You're trading at 271. It's a little bit rich. I probably am not entering this one with my weekly stock pick, but he does have a great track record. So McDonald's is his pick this week. I wanted to take a look at some of our crypto investments that are in some of the ones that I particularly watch. Mara, we had a buy-in here at $8.52. You're trading at $7.81. It's at $7.94. I think anything in the sevens, I think you're getting back up to eights. So I think it's a buy. I'll probably buy a little bit of this today. Maybe trade a little bit for 1-2% gain. Nothing huge. If I get a good one, great. If I get it stopped out with like a 1% loss, I'll just take a 1% loss. These are ones that move really, really quickly. So Mara is one. Riot is another. Riot is up at 863. The algorithm has you buy in at 705. It looks like the MACD is going to cross down. You're getting that button hook. In pre-market, it's at 871. I would say if you bought at 7, just sell it at 9. I'd probably get out at 9. GBTC, this one trades in pre-market, kind of just crazy. So don't take pre-market the way that you should. This one has us in at 1177 on March 6th. March 7th. You're trading at 1595. I would say if you get to 16 today, sell at 16. Take your profits if you're in that one. ETHE, Ethereum. This is the Grayscale Ethereum Trust. 780 was the buy-in on March 13th. You're trading at 816. In pre-market, it's up at 818. It's just kind of been flat. Ethereum just hasn't moved. Bitcoin's been the mover. And Coinbase, remember they got that Wells notice. I was asked this weekend, should I buy some Bitcoin and just put it into Coinbase? Your key's your coin. I mean, that's it. Do not think that, oh my God, I'm just going to store my Bitcoin. If you're trading Bitcoin, do it on cold storage. Upload it every time you want. Just download it when you can. Take your keys away. And if the brokerage doesn't allow you to do that, it's not your crypto. It's theirs. So find a brokerage that allows you to unload in cold storage and upload from cold storage. And if you don't know what that is, don't trade crypto. Do not trade crypto. You can trade Coinbase, you can trade Mara, you can trade Riot, you can trade GBTC. There's a ton. You can trade NVIDIA. Just NVIDIA. So now to the topic that everyone's been waiting for. IRA versus Roth versus anything. Let's go to the private Facebook group because Sam posted a question in there. And he basically wanted to know, hey, I've got this rollover IRA, and I'm summarizing it while I get to it. But I've got this rollover IRA. How do you trade in an IRA? Yeah, I'm rolling over an IRA. I was wondering how you would approach setting up a new one. Would you mix it up with trades, or would you strictly go long in an IRA? Here's the way I look at IRAs, and I have a personal experience with this. First off, if you're paying, there was somebody in the comments that said they were paying, I think it was Edwards Company or something, paying for an IRA. Do not pay for your IRA. Get into Fidelity. It's free. If you put more than $2,500 into Fidelity, just email me. I'll get you $100. I think Stuart just mails it out in a gift card. But yeah, anything over $2,500, put it into Fidelity. I have in Fidelity, I have a traditional IRA, which I rolled over from when I was working at Cox Communications. This was back in 1990s. I think they gave me an option of taking a payout or keep my retirement pension. Because back in the 90s, they still had a pension. But it was only like $10,000. Today, by the way, that's a couple $100,000. But that's outside the point. But yeah, so I got that. I rolled that into a Fidelity IRA. And ironically, it was Fidelity way back when. I think it may have even been Oldie at that time, which Fidelity bought. But I had that. I rolled that in. I was able to trade whatever stocks I wanted to. It was great. Then when I left Time Warner, I got another IRA. I rolled that. And Comcast, I rolled that into the Fidelity IRA. And then when I started Earthlink, I had a 401k. I had a 401k and a Roth 401k. I split them up 50-50, by the way, just because I was in my 30s and 40s when I was working at Earthlink. I didn't want to do a lot of math. I didn't want to do a lot of risk. So I put 50% into a Roth 401k, 50% into a traditional 401k. Understand the difference. Roth, it doesn't matter if it's Roth IRA or Roth 401k, you pay the taxes going in. You don't pay the taxes when you take it out. With a traditional IRA or traditional 401k, the money goes in tax-free. When you take it out, you pay income tax based on your income tax. So that's the difference. And again, consult your tax professional. Go online. I am not a tax professional, but understand that's the difference. So when you've got an IRA or a Roth IRA and it's in Fidelity, you can choose whatever stocks you want. Sam's question is, should I trade in there or should I do long-term investing? I will tell you I do both. I don't typically do day trading in my Roth or my IRA. Understand that Roth, you've already paid your taxes on. So any money that you can make is money that you can keep when you're 59 or above. You just take it out. You don't have to prove anything. You've already paid the taxes on it. There is nothing that you need to do in a Roth. So I trade that one. If I'm going to do day trades, that's typically the one that I'm doing. And the reason is because I'm 52 right now. At 59, I can start drawing that out. I probably don't want to draw that one out. I probably want to stay in my brokerage. And it's again, it goes to kind of, I probably need to do this on the Fire podcast, but my thought process of how I live was I'm living on my brokerage account right now. At 59, if I need a backstop, I've got my Roth, which isn't going to be penalized if I take anything out. And then once I hit 65, I can start taking out the traditional IRA. I think it's 65, might be 67. I'm not a tax professional. But my thought process on this is history. History has proven buy and hold makes you a significantly more successful trader than day trading. So when I say I do both, when I first rolled over, and I'll go over kind of my fights with Earthlink per se that I had, but when I first rolled over, I basically back when guess it was about a month ago, I went over 5 stocks that you could buy and hold for 5 years. That's all I did. When I rolled over that stuff, I bought Apple, I bought Amazon, I bought Google, I bought Meta, I bought Microsoft, I bought Tesla, and I bought some S&P tracking funds, QCLN, and some other ETFs. I basically put it into, I think it was about 10 or 11 investments. And I basically just bought the hell out of those things, split it up the way I determined, and I left it for a little while because it was doing fine. There was, it was up and down every day, but it was doing fine. I didn't trade in it. In 2021, I started to trade in it because you started to see a little bit of divergence in some of the things. I didn't trade Apple. I didn't trade Amazon. I did trade some ARK funds that I was in 2021 because they just weren't doing well. And so I managed that. And typically what I'm doing with my IRAs is I'm rebalancing every quarter. If there is a sector that isn't working, like right now we went over XLK is beating XLE. Well, I've got some energy names like Devon in my IRA, and they're actually losing right now. I'm not gaining on those. I've got an 11% dividend that's being paid out to it, but I'm still down on that one. So I've got to make the determination. Do I buy more or do I get rid of it because it's not working? So that's what I'm typically doing. You can do whatever you want. Say you do a 2-hour trade in TQQQ in an IRA. You ain't got no taxes to pay on it. You got nothing. MPLX is one. Again, there's some tax issues. MPLX, because it's a master limited partnership, I have been hit with taxes in my IRA on that one. And it comes to like a 8K or something like that Fidelity handles for me. I've got, I believe, 5 figures in that one, and the tax bill comes out to be hundreds of dollars. It's not thousands of dollars. So it's not a big tax bill. It's just more of an annoyance to me. So there are some taxes, but understand if you trade in your IRA or in your Roth, there's no tax event that happens there. So it's a great place if you want to trade. Now, understand that money that you're trading in there, it's an opportunity cost. Because if you're trading, say you're trading TQQQ and all of a sudden you're down 10% on your TQQQ, but it could have been gaining 4% on your stuff. You want to not take unnecessary risk in your long-term portfolio because that's what your 401k or your IRA is. It's long-term. So there was Joe, I think, asked me and I'll tell this story outright. So I think it was about 2015, 2016. Earthlink was going through some problems, and I said, I've got a pretty big IRA or a 401k at that point, and I didn't want to, it to get into some type of, it was my money. I knew where it was in my name, so it wasn't anything that I thought Earthlink was going to lose. But I did research on this thing called an in-term distribution, and I knew I could ask for it. And what in-term distribution is, when you're employed by a company and you're in their 401k, typically they won't distribute that to you. You have to have an employment separation in order to get access to that money. They want that money. As long as you're an employee, they want that money. The reason they want that money is because typically companies' 401k is a part of their balance sheet. And so they hold it in a certain bank. And particularly with me, I think it was Merrill Lynch or somebody they had it with. And they would only allow me to trade in 7, 8 funds. And I went to them in 2000, I think it was 2012, 2013, somewhere in that neighborhood. And I said, I want an interim distribution. I had talked to a money manager and he said, you demand an interim distribution from HR. Went to HR. I went to the board of directors. I said, I want an interim distribution. I wrote a letter to the board of directors. I was denied at every point. I was labeled a problem employee. The reason I wanted an interim distribution, I wasn't going to take the whole thing. I said, you know what? I understand that you guys have this money on your balance sheet and you want it on your balance sheet. I want half the money because I want to invest that the way I want to. I don't want you guys limiting it to me. So Merrill Lynch said, you know what? For you, we're going to allow you to trade in an expanded funds. for $100 a year. So I got this implemented from Earthlink, where they would expand it from like 5 funds to 100 funds, but you had to pay $100 a year to do that. And I said, I don't want funds. None of these funds make sense to me. And I literally had an HR representative sit me down and say, this is for your protection. Bullshit, it's for my protection. F you. You want Angry Gary? That was Angry Gary. I said, I am making more money by trading my own money than I am in this 401k. Well, you're just not doing it safely. Bullshit, I ain't doing it safely. It's my freaking money. And yeah, I went like that. That was what I did. So I was labeled a problem employee. But if you are in a company, you want to go to HR and you want to ask about the opportunity for an interim distribution, there should be no fees. There should be no penalties. There should be no nothing. All you're doing is taking that money from a 401k and forwarding it over to your own account that you're completely in charge of. If you do that, my suggestion, do it to Fidelity. Fidelity was fantastic with me through this entire. I will tell you, I was with E-Trade. I was with Merrill Lynch. I was with TD Ameritrade. I was with Fidelity, and I was with Schwab. All of those are companies that I had. When I finally had the ability to roll over, Fidelity made it easy for me. And I rolled it over and I was able to manage it myself. So the interim distribution is what you want. If you want to be able to take your money into your own hands, do it. I will warn you, there is, the HR person wasn't 100% wrong. I will tell you, for the majority of people, an interim distribution is basically a way for you to lose your money. They want to do it for your protection. It's kind of like, the government saying the pattern day trader rule for accounts under $25,000 is for your protection. Bullshit. If you know enough, you're fine. If you don't know enough, you're taking risks, unnecessary risk. So I would tell you, if you get an interim distribution and you don't have a track record of actually making money, say for instance, you just got into trading the last 3 years. Well, the last 3 years, you might actually be down if you've been trading. I wouldn't take an interim distribution and then say, I'm going to manage the money better. Nah, I'd take the interim distribution and probably find 4 or 5 ETFs and throw it in there. That would be me. But do I trade in the IRA? Absolutely. I typically will day trade, just kind of to go back to the FIRE thing and how I live, since that interests some people. I live off my brokerage account. I'll do day trading in my brokerage account to make my mortgage, to pay my bills. I've got enough of a buffer that even if I lose in a month or something, I'm still good. I have a part-time job with Major League Soccer that I talk about all the time with one of the sponsors of the podcast, idshop.com. Go to idshop.com for all your security, printing, whatever you need. Just go to idshop.com. Find somebody in your organization who would like idshop.com. These guys are great. I work for them, pays my mortgage. It's a decent living. But I do have a brokerage account that I trade in. Those brokerage account trades come with tax implications. There are times where I'm just like, you know what? I got a couple $100,000 of cash, that I can trade with. And it depends on the time in my IRA. Right now, I don't have a lot of cash because a lot of it's tied up in investments. Because I think I really, really want to be invested in this market. I don't want to be uninvested in this market. So, that's kind of my story. I trade in it regularly. I would not keep any money. I would keep less than 5% of your IRA actually in cash, because I'm a believer in the markets. And yes, you would have been down significantly last year. But if you're going to keep your money in cash, in your IRA, might as well buy VOO. Might as well buy, long-term bonds at this point. Short-term bonds. I didn't look at the bond rates. I was looking at it beforehand, but on my screen you'll see 6-month bonds, U.S. Treasury, no coupons, 4.8%. 6 months. I mean, you're getting a 4.8% APR. So you're actually only getting 2.4% on 6 months. It's paid out the end of 6 months. If you got cash in your account, why not put it there? If you ain't using it, 4.8% is a great option. You can get a corporate bond for 5.1 with an AA rating. You have to do your research on bonds. I mean, again, this 1 year at 5.4 is great. You can get Bs at about 8%. I mean, 5 year at 11%, you're taking risk. They could default. That's essentially the risk that you're taking for some of these, is that they'll default. But you can absolutely buy some of these. You can buy a CD, 1 year CD at 5.3% through Fidelity right now. It's crazy. There is no reason to have your money in cash. The only reason to have your money in cash right now is to day trade or take an opportunity. If you're receiving less than 4%, I would tell you get into Fidelity, because they can absolutely 100% give you 4% on your money. If you're in, I know I'm a big fan of Bank of America. The reason I'm a big fan of Bank of America is because there's a lot of uneducated financial people who put their money into Bank of America and just leave it sitting there in cash, thinking that they're getting a great interest rate. Well, they're getting you an interest rate. I think I looked it up Friday. It was 0.3%. So, they're getting from the Fed, 4.25%, and they're paying you 0.3%. So, yeah. And Brian, I think it depends on your company. Brian says, I believe you can keep your 401k open and take your profits and move them to an IRA with no penalties. Yes, that is correct. If you leave the company, you can leave your 401k with that company, but they are taking fees. Understand, when you're not an employee of the company, they will take fees out of your 401k. It is absolutely 100% better to roll it over to an IRA if you're not with that company anymore. Or you can roll your 401k over to another 401k, but when you're displaced from one company, there ain't no reason to roll it into another company's 401k. They love you to do that because it boosts up that new company's 401k. And then they'll hold it in there, and they won't allow you an interim distribution while you're employed. So move it over to your own IRA. I have found that, again, call Fidelity. Fidelity has all of this stuff. Their reps are going to know exactly what to do and what's the best thing for you. And I would tell you, roll it over and take it. You can roll the entire 401k over. That's what I did. When the second I quit Earthlink, I said, give me my money. I think it took a total of 7 days to get it over. They were fighting me left and right. Yeah, you got to sell some of this. You got to sell some of this. I said, no. Give me the stock. Took the stock, rolled it over. No penalty, no fees, no nothing. They gave me the funds, except for, I think, the fractionally traded ones. You have to get rid of fractionally traded when you're transferring over. So you do have to sell those. But it was just rolled over, sold out of those funds, went and bought Amazon, blah, 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 the whole thing. So, okay. There is my IRA story. Sam, hopefully I answered that one again. My belief is that when you roll it over, you should absolutely be trading in this. I do take a look at quarterly. In fact, it's March 27th. You guys have seen me go over some of the Seeking Alpha, where I'm looking at different sectors like energy and industrials and technology, all of the spider sectors. I'm taking a look at that because there's certain sectors that I want to get into that haven't worked, and certain sectors that I want to get out of that haven't worked, and certain sectors that I want to get into that have worked. Technology has just been a killer. Let's talk about our scans now. As far as our one of our core portfolios, J&J. This one got you in March 6th at 154. I said it was a good price. Got you out with a 2% loss here. Got you back in at 152. I think anything in the 150s, you're doing fine. You're trading below the 200-day. I think this is just a stock that you buy and hold. I personally have this one. I think I only have about $10,000 worth of that one. It's not a big holding, but for access to healthcare, I do keep J&J. It's a mainstay. I am not a fan, by the way, of some of the things that J&J management has done over the years, but it is what it is. PayPal. 73.89 is the buy-in right here. The RSI is at 52. You have the MACD crossing up right on the oscillator line. You're in between earnings. There's no real catalyst. This is probably, it traded down with the Square News. You're below the 200-day. You've covered this gap here down to 71. The only gap that you haven't covered is the one up above at 83. So I think 74 is pretty well. I think I looked it up. The average analyst has it at 83. As far as energy goes, Arch. This is coal. Arch, we have a nice dip down here. 130.94. When you look at Arch in FinViz, they have a 0.77% dividend. It's next to nothing. Their PE is 2. Forward PE is 5. They're down 7% year to date. Performance over 1 year, they're up 1.93%. They are 22% below their 52-week high of 167, 27% above their 52-week low. The average price target on this one, ironically, is 199. This one has broken down. So, again, you got out the last time with a 3% gain. This one has been a monster for 2 years. If we go and we look at a weekly chart of this one, look at that. I mean, ever since COVID, where it was trading at 20, you went all the way up to 180. So at 130 now, you're kind of putting in a pre-pandemic, around October of 2019, December, this was an $80 stock. I think coal has just become more expensive. Here's the deal. Over 2 years, my algorithm makes you 28%, so it's still positive. But with this particular one, and nobody would have guessed this, the actual buying and just holding the asset has made you 216%. So take your pick, whatever you want. Arch came up. As far as our levered ETFs, SARK. This is the short ETF for ARK funds. It came up with a buy at 43.32. So if you think we're going down, SARK is the one to buy. SARK, 43.32. The RSI is at 49. It's in no man's land. It's kind of just hovering around here. I would say anything close to 40 is a decent buy on this, because I think at some point you get up to 50. I think if there's a gap up here, doesn't mean that we're going back up here, but there's a gap up here between 57 and 69. I think that's just, are we getting back up there? I think you're getting back up to 50 at some point if we continue to go down. As far as our spider sectors, industrials, XLI, these have been beaten up. 96.92 is the buy-in here. The RSI is at 46. The MACD is down lower. It's still not a great buy. You're under the 200-day. The 50-day is crossing the 200-day with a death cross. It's okay. Here's that one that was interesting, and this is in my personal watch list, and this is Rocket Mortgage. Rocket Mortgage did phenomenally well with 0% rates, because they basically refied every freaking mortgage in the country down to 2%. It hasn't been good, but here's what I want to show you. We're seeing an ascending triangle, and you're seeing it break out up here. In pre-market, you're down to 871. I'm sorry, we opened up 871. So this is a live candle. You opened at 890, and you're trading at 871. It's kind of come down. You're trading at session lows here. But this is what was interesting to me. When we go to Rocket Mortgage and you look at the average target price, $7.69 is the average target price. You're trading at $8.70. The PE is high. It's 27. Forward PE is 18. You're up 26% year to date. You're down 17% over 1 year. There was a downgrade in January with a $7 price target. This was an interesting article from investing.com. Mortgage shift could be a catalyst for Rocket Company earnings. Take a look at that one. This is what I found interesting. There is not one sell on this insider buy list. This goes back to October of last year. They're buying. The insiders are buying this tremendously. Specifically, Matthew Rizek, who's an officer, a director of the company, and CEO Jay Farner. They are buying a ton of stock in this. We're talking value of $200,000. That's got to be a couple $1 million. So maybe not a lot of money to them, but it does imply that they do think that the price is underwhelming. So that was an interesting one. Starwood. This is Starwood Property Trust. $16.86 is the buy. The MACD is super low. You're coming off an RSI at 33. The RSI is at 44. There is an ex-dividend date, March 30th on this one. And this one is an interesting one. You want to know why? Because it's a REIT. And the dividend is 11.39%. You're getting a buy-in right before the dividend payout. I don't know what the payout's going to be, but you're down year-to-date 8%. Performance over 1 year, you're down 27%. The average target price on this one is 23. You're trading at 16. That's why I brought it up. REITs have not been fun on this one. Now, you've had 2 sales at 24 and 21. Great sales because you're trading at 16. But you've got an 11% dividend. So if you want to buy it on the dividend, go and buy it before March 30th. And finally, for our final pick, Peloton. Peloton has been beaten down, 954. If you remember, I said in January when it got this cross up at 872, I thought it was a pretty good buy at 872. This one went all the way up to 17. You doubled your money at 872. Nice and easy. You've been in a downturn here. You got in at 1397, got you out with a 10% loss. Down here at 954, I think it's a decent buy. Your RSI is at 32. Your MACD's crossing up. Your earnings are coming up May 8th. They've been doing some pretty good stuff. I am not as enamored with this company as I was. I do have 2 friends who have rented the bike from them. It's turned out pretty well for them. They didn't want to put out the $2,000 for the bikes. They're renting it for I think $50 a month or something. It was delivered. They have a 1-year contract or a 2-year contract. They both agree that they enjoyed renting it and having it put in their house versus actually buying it. So I don't know anybody with the treadmill. I don't know anybody with any of the other exercise stuff. I particularly am not as enamored with Peloton ever since Netflix came out with their Nike programming. And I talked about this a couple months ago. Nike, essentially Netflix has put Nike exercise programming on their playlist. It's great. I can do my yoga. I can do my body workouts in the house. And I just pay the $15 a month. It's not like I have to pay Peloton an additional $12 a month for their app, even though I love the Peloton app. Now, Peloton allows you to put your watch, and it's interactive, up on your screen while you're doing it. Netflix has the same ability. They'll probably do it at some point. They're probably just testing out how many people actually work out with this programming because they want programming that people use. So, Amazon could do it too with their Amazon. They don't have to buy Peloton. They can just do it on their Amazon app. So it's an interesting one. But Peloton. Okay, let's talk about ads. Visible. If you're paying more than $30 a month for your phone service, there is a link below. You'll get $20 off your first month, and I get $20 off my next month. But I have Visible. I was literally on vacation, I think 2 weeks ago, last week. It's almost 2 weeks now. But I was on vacation with people paying $90 and $100 to Verizon. We're standing next to each other, literally standing next to each other. And I'm getting 40 to 50 megs per second. They're getting about 20. Didn't notice the difference. We were hiking, not too big of a deal. But I'm paying $30 a month. They're paying $100 a month. Add that up. Let's see. What's 70 times 12?
It's $840.
There you go. Do you want to save $840 a year to invest in? Yeah, go to Visible. Links down below. Other one, TrendSpider. If you want 25% off, you like the charts that I do, you like the algorithm that I have, which provides you entries and exits, you want to do it yourself, just get TrendSpider. It is awesome. I will share my algorithm with you. We have a 4-hour algorithm and a 65-minute algorithm. I have watch lists, daily stock picks, my core portfolio. I have triple levered ETFs that I look at. Energy names that I trade, low-cost Vanguard ETFs. All of those I'll share them with you, and the scans. Everything that I do in this podcast, you can do. If you don't want to spend the money, by the way, Active Trader Pro or your brokerage, whoever your brokerage is, they have charting software. So get that. I'll share the 65-minute algorithm with you if you want, so you can set it up in your own charting program. FinViz. You guys see the tools that I use. I don't use anything that's crazy. So final sponsor is, like I said, I think in the middle of the episode, idshop.com. They employ me. So idshop.com, those RFID badges that you scan in and out with. Yeah, go to ID Shop. I mean, they'll give you the best price, and it's the best company to work with. I mean, I can tell you, MLS works with them, NHL works with them, Miss America works with them. They've worked with every major sporting league that you can imagine for badges, security, things of that sort. Printing. If you just want to print something, if you want laminates, if you want lanyards, say your company wants the little spindle things for the belt, but they want their logo on it. Boom, go to idshop.com. Yeah, they're great. I mean, they really, really are. Any questions that you have, hit me up. Look at the link tree below for all the things. If you make money, I ask you for a tip. That's it. I was watching Kelly OG, by the way, this weekend on YouTube. And she put out a video, I guess, a couple of weeks ago that she went from 0 to 6.5 million. I don't believe this girl got 6.5 million in trading. There is no. She got 6.5 million from everybody basically paying her for her good editing and $100 a month for her diamond program. So I can tell you, one of the things that Earthlink, I found out at Earthlink, is if you get people to pay you a monthly subscription, they don't look at their credit card. So your number one, savings tip, go look at your credit card statement. Every month you should be looking. I use Mint, and I've said this on the Fire podcast. I use mint.com, and every night I just go and look at every expense that I had for that day, every pending expense. I just scroll through on my phone. It's so easy. It takes 30 seconds to look that up. I don't even have to look at an account. I just go to one app. It's all imported for me. And I basically take a look and I say, yeah, I think one of my friends was, there was somebody charging her a monthly fee of like $20 for the last year or so. She got all the full year back. But I can tell you from Earthlink, we had hundreds of thousands of people on dial-up internet paying $30 a month. As of I left in 2020, you still had people paying $30 a month for dial-up internet. The number one reason for disconnection was death. So, multi-million-dollar business based on just charging on a credit card. People don't look at their credit card statement. So Kelly OG, while I would argue she probably doesn't have $6.5 million, I would also argue that she probably got a large majority of that through monthly fees on the credit cards. I looked at the Better Business Bureau, and she doesn't have that great of reviews. People saying, yeah, there's nothing to this. So if you have any questions, though, hit me up below. Do not pay one of these charlatans. That's why I just ask for tips. If you want to give me money, you give me money. If you don't, you don't have to. Doesn't matter to me. But TrendSpider is one tool that I don't trade without. I've gotten a lot of feedback from people on this podcast who listen. It is an absolute necessity for me to trade. So again, if you're trading whether you're trading in your IRA, whether you're trading in your one thing I didn't bring up, and by the way, if you're still on this, it's 56 minutes in, the greatest investment tool is healthcare spending account. It's an HSA, not an HRA. HRAs are ridiculous in my mind, unless you absolutely know you're going to spend the money. The difference between an HSA and an HRA is an HSA does not go away at the end of the year. An HRA, if you don't spend that money, you don't get it back. So an HSA, you can take it and you can invest it. So for instance, I think for a couple of years, you have to have a high deductible insurance plan, and it's got to be HSA specific. They will identify that on your health plan if it is. And for me, I think I could put $3,700 a year into that. So yeah, you can put the Andy saying don't eat the yellow snow, but HSA, I think at $3,700. I think I did it for 2 years, so I got close to $7,000 in there that I put in. I just let it sit. I do invest it. I think it's worth almost $15,000 now or so, but I just let it sit. I do not use it for healthcare spending. The reason I don't, I just pay out of pocket for healthcare spending. I keep the receipts. And the reason is you will need that money later in life for healthcare spending, or if you don't need it, you can just take it out with the receipts. There's no statute of limitations for the use of those receipts. By the way, we're over 4,000 on the S&P. Expect it to pull back. But you can use those receipts. There is no statute of limitations. So, for instance, the $10 that I paid for my Synthroid to Walmart the other day, I just keep that receipt. I keep it in a little folder. I scan it. I put it in my Gmail, and I keep it in a little folder. And so that 20 years from now, that $10, maybe it's worth, 20 years from now, a couple $100. It adds up. It all adds up. So the greatest investment for me has been HSA. If you don't have enough receipts and you need money at 59, you can take the money out and you just pay income tax on it. There's no penalty after 59. So it's as simple as that. So Roth IRA, there's so many trading tools, and Fidelity allows you to, I have my HSA through Fidelity. There's no fee, and you can invest in whatever you want. I had for years, I had the ARK funds in my HSA. For years, I've had Apple in my HSA. It's just like any other account, and they don't charge you fees. They give you a debit card. I never use it, but I just invest that money. So I've gone on an hour. Any questions, hit me up. I think I've gone on enough. Take care. I'll talk to you tomorrow. Thanks for that tip, Andy. Andy, you threw me off. I'm looking down. I'm saying, don't eat the yellow snow. Andy, are you in a place that has snow? Because I'm in a place that has torrential rain right now. If you didn't see it on the news, Atlanta had golf ball size hail. So, Netflix, by the way, what a fucking stock. Whew, look at that. Let's see. In the core portfolio right now, looks like Bank of America is the best performing. Tesla is the second. Nah, you're okay, Andy. It's my fault for looking down. And sometimes my friends all say I get preachy sometimes when I talk about investments. So sometimes I need to be taken down a notch. Let's move you over to Active Trader Pro because I've got Schwab up there. And Schwab, you're only up, looks like it lost its mojo a little. Let's zoom in. It's lost its mojo. Oh, come on. Let's look at DPST. Andy, I heard Milwaukee got like 14 inches. Where are you at? I need to drive to New Jersey at some point, and Scotland. Andy, we're all still learning. We're all learning. That's the thing, Andy. Trading is a tool that you can use. Look at DPST up 8.46%. But in pre-market, it got all the way up to 854. Today, it opened. It got up to 852. It closed at 755. Andy, Scotland. What was I reading about Scotland? I think Real Sports on HBO had the two strongest men. One of the guys has autism. And through lifting and stuff, he learned how to control his anxiety with autism. Good story. And God, you have a gorgeous country up there. But I don't know how you live up there, Andy. Snow in March and April. Whew. That's a lot to take in. Okay, let me go. I'm going to upload the podcast. Let's see. And Andy, don't be shy if you have questions. You're fine throwing me off, though. It's my own damn fault. I should trust me. Usually the chat section is pretty filled with not troll comments, because I'd beat someone if they did troll comments. But somebody will always ask something inappropriate in the comments. It's usually one of the OGs. Like Brandon Bitch. Brittany Bitch. I made some fat kid pizza all weekend, by the way. Brian, did you post something in the Facebook group? Hey, Brian. Hold on, I'll answer you in a second. Brian, the one that you presented with the ex-dividend date, there is a... COP has an ex-dividend date. But there is an ETF around dividends. Let me see. This is a good... the app you use, it paid for. Which app? TrendSpider? This one? Let me go back to Safari. This one, Andy? This is TrendSpider. It is, yes, it's a subscription based. I think you get 7 days for free. There's a link down below for TrendSpider where my code gets you 25% off. Full disclosure, I think 50% off is the best deal that you'll get. So sign up month to month and then wait for one of the 50% off codes to come up, and you'll get 50% off for the year. Oh, Fidelity, yeah. Fidelity is, I think it's American Brokerage. This one. Fidelity.com, FIDEL. Let's see. I don't know if they have it in Scotland, but it's an American brokerage. It's Active Trader Pro. That's Fidelity Active Trader Pro. Yeah, I like that, Brian. There is an ETF, and I was trying to look it up, and that's why I posted the Investopedia article. I was trying to look it up. There is an ETF that literally trades before the ex-dividend date, and then it basically sells the asset after the ex-dividend date. So it accepts just the dividends and then redistributes it to, I think, on a monthly basis or a quarterly basis. I couldn't find it, though. But it's an interesting one, and I will tell you, it does not beat the S&P long term. Andy, I would look at TradingView. First off, if you're new, I would learn charting, but TradingView is a good one. TrendSpider is my favorite. But your brokerage should, it absolutely should have some type of charting program. If the plus 500 isn't good, I mean, you got to find something you like, something you're comfortable with. And I will tell you, it took me probably 6 months to become comfortable with both Fidelity and TrendSpider. For me, because I'm dumb, there's a long learning curve. FCNCA. $27. Oh, that's oh, come on. I think we're seeing a return of Friday where, well, last week, I think it was Thursday, where you go up at open and then you crash through the day and you wind up open. Andy, I will give you a link to a fantastic YouTube video from Trading Rush on on the MACD. Give me 2 seconds and I'll find that for you. That is what my algorithm is based on, the MACD. So, you've got a friend in me. You've got a friend in me. Carvana is still the sponsor, by the way, of my podcast, which is crazy to me that they are still paying to sponsor my podcast. But okay. Tweet. I laughed, by the way, when I read Apple doesn't want to be Microsoft, where they missed out on the phone. I still remember fucking Steve Ballmer coming up and saying that the Microsoft phone was going to revolutionize the mobile world. That guy, man, how that guy became rich, I just don't know. They'll let anybody become a CEO, I guess. Do 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 do. Yeah, tell me. Hit me, Joe. Hit me. The Facebook group, man, there is a lot of freaking people trying to gain access to that. I got almost 2 freaking where a tweet? I have seen it. Yeah, let me go look. Hold on. I think. Yeah, I took those down though. Yeah. There have been some that have joined that, yeah, they're posting to their groups. I don't see it right now. I know you're an admin. Post it in the Facebook group. Post the photo in the Facebook group. And what I'll do is I've been deleting and basically banning those people. So I notice, it's funny because I think we only have like 200 people in there. And there's like 40 people that join all at once. And so I will, Brandon, I'll make you a moderator if you want. Let me see. Members. I thought I made, Brandon, I guess I didn't make you a moderator. Add as moderator. Send invite. Okay, you're a moderator now. You know what? I'll post. Okay. Paul Parker. Here, let's see. Members. Paul Parker. There he is. Joined on Thursday. Let's look at the dudes. Oh, fuck yeah. Oh, this guy's getting banned. Yeah. Let's see. Ban from group. Delete activity. Delete future accounts. Boom. You don't have to post it, Joe. I deleted him. I'm on there at least like 4 or 5 times a day. And usually that's where I have been posting the majority of stuff that I read during the day. And I will tell you, it is probably the, he's gone, but it is probably the place where you're most likely to see, hey, I'm not going to do a show tomorrow. Or I'm not going to be on tomorrow. Here, let's see. Andy, I'm going to post that. I'm going to bring you back over here. Brian, I like this list, especially COP. So here, YouTube. We'll go to YouTube. And Andy, the one that I love, MACD Trading Rush. This guy's channel, this is it. Trading Rush. Share. Oh, come on. Share. What the hell is going on? Why can't I share it? Let's go there. And, oh, I guess I haven't liked it. Why am I not subscribed? Oh, it's on my other channel. I'm subscribed.
I've created this channel to expose every
Copy.
And show their probabilities.
Brian, Andy. That Trading Rush channel is amazing, by the way. He backtests strategies, and this is a day trading strategy that he uses for MACD. And it is by far the most successful. He's got a Patreon, and I'm not a member of the Patreon. I never pay anybody for any of this stuff. The free trading course, I wouldn't do any of this stuff, but this is where I developed the MACD strategy that I have. Hey, Andy, subscribe. Thank you. But that's where I developed that one. It's great. It's awesome, Andy. I like it a lot. I'm going to delete your post, Joe. That's the exact post that seems to come up. Okay, let's see. Paul Parker. Yeah, the dudes, I mean, profile picture, I was like, you know. I do get, it's funny because they get in here. Oh, I don't want my profile. I want to go back and look at the page. And I'm still, I'm a boomer, man. Loved Sam's question, by the way. Really liked Sam's question. So DPST is under 8 again. Let's go back to Active Trader Pro. I'm going to look at FRC. Oh no. Ooh, FRC has crashed. I think if you get this at 14, I think you're good. But something's going on. We're again. Remember I said, hey, we're at 4,000 on the S&P. Get ready to crash. It's at 3,995 now. So, yeah, Andy, if you're looking for apps on your phone, Brandon's right. I use a PC. It's called volatility, Joe. But Andy, if you're looking for apps for your phone, I use Fidelity app. I use CNBC's app. Oh yeah, I didn't bring this up. I don't think mortgages are a big issue. Musk is kind of tweeting that mortgages are a big issue. I don't believe in that, but I do believe the commercial real estate that was explained to me over the weekend. I think this is a looming problem and why I'm not necessarily buying into the market. So, for instance, remember back in the day, Andy, I need you to build me an app. But back in the day, it was 2008 and the housing crisis that happened. Essentially, they were giving out mortgages to people for houses they couldn't afford. Well, essentially, the same is going on in commercial real estate, just a different kind of thing. It's not as dire, but with the reluctance of people to go back to work, it's kind of working itself out in the same thing. So the way it was explained to me was, commercial real estate, there was this boom at about 2019 and into 2021. It continued. And I see it in downtown Atlanta where the boom just happened. And people started, borrowing money left and right for commercial real estate. And you had companies like Amazon who couldn't get enough warehouses. You had companies like Apple who were looking for regional offices. You had companies, Amazon as well, looking for regional. I mean, I'm using Amazon as an example because they hired 1 million people over the course of like 1 year. So you look at this stuff and essentially right now, the people can't fill buildings that they're paying low mortgage rates for. So the question comes, do the banks give leniency for commercial real estate owners, or do the banks basically take ownership of these buildings that have become significantly less in value? And so it's a little bit kind of different than the mortgage crisis, but it comes out to the same thing, as that we've been loaning all of this money out, and it's just not going to come back in. So it was an interesting take on it. Hey, Joe, take a look at the screen right now since FRC is making you sick. We'll look at a 5-day. Do you notice a clear kind of support level and a resistance? And I don't think I can draw on here. Let's see. I see support right there. And let's see. And I see resistance right here. So I think you've got 1242. And again, this is a 5-day, so it takes just the last trading week. You've got about, say, 1250 as your support level. I think your resistance is up at about 17. I mean, it's clear as day. You've got this kind of bouncing up here, this kind of bouncing here, this bouncing here, this bouncing here. Yeah. Brandon, I'm hearing the same thing, is that Amazon is subletting some of their offices. Microsoft, my brother works for, and they're not requiring people to come back in the office. So they've got all this extra office space. New York City is seeing an influx of people coming back, but that's just because people want to be in the city. But they're not coming in 5 days a week. And so you're seeing the quote-unquote hoteling policy, where even Google is saying, hey, we want you back in the office, but you ain't going to have a desk. It's going to be a hoteling policy. You come in first served, first in, first served. So it's interesting. Let's see. Indices check. Oh, I got to check. Nope, I don't have texts. Let me see the indices. I am log face ID. I'm up 0.04, so I'm kind of flat, whereas the markets are up, so I'm down compared to the markets. I'm not doing well today. That's not a good thing, but I beat the markets last week. I know that. Let's see. Does it remove those? Let's see. If I go back there, does it save them? Yes, it does. So you know what? I'll save those in there for FRC. We can take a look to see if I'm right. Because that 1242, it's coming down there. I think Mara and here. You know what? Let's go to our 65-minute algorithm. I'm hearing a dog cry in the background, though. Here's your 65-minute algorithm on Mara. You're out of it right now in the 65-minute. 10 minutes, 10:30. 10:35 one comes up. I'll be right back. By the way, Andy, if you're a coder, Andy left. I was going to say, if he's a coder, TrendSpider's up his alley. So I have a friend who wants to track stuff. Andy, I was going to say, if you're a coder, TrendSpider is your gig. I mean, you'd love TrendSpider with all the algorithm shit and coding in it. I mean, it's got option strategies. It's got everything that you need. Here's what I'm going to do. I'm going to look at our 65-minute algorithm. And let's see if any of the levered ETFs are current buy. TARK. This is the 2 times ARK index. You're currently a buy in this one. Or I'm sorry, let's look at the 65-minute. This is 65-minute. Look, you bought. You dipped down. Oh, I'm sorry. It's going to get you in here. So, yeah, let's go back to the market, the strategy tester, 65-minute, DRN. Let's look at a good one that I know. DPST is currently in. Let's run the strategy tester on this one. 734. You're trading at 797. Brandon, I had friends that wanted to track kind of stock picks and stuff. I'm not against it. I just don't want to do the work. And it's kind of like, I've started. I got to sneeze. Excuse me. I started to do the Friday recaps with that kind of in mind. Where I just kind of look at stuff, but I'll get there. I just don't know right now. You're welcome, Andy. I'm on every day, so come on back whenever you can. What I don't want the channel to turn out to be is kind of a measuring stick, because we're all on different paths. Here, let's look at OG. Let's go back to the measuring stick that I always use. Kelly OG. Why does nobody ever tell you this about trading? Oh, she just posted this yesterday.
Trading is hard. Trading is really hard. There's literally a statistic that says 95% of traders fail. Trading is apparently made for you to fail. Honestly, you'll probably fail trading too. It probably won't work out for you. I'm being very honest. Hello, my name is Kelly OG, and I teach people how to make money for a living, which is kind of odd because I just said that you would fail. I'm 21 years old, and trading literally changed my life. I saw a lot of success in trading. I started a business off of trading, and that saw a lot of success too. And ultimately, I became a multi-millionaire by the age of 19. The reason that I say that trading is not going to work for you is because a lot of people come into trading with an expectation, and that's the number
I
one thing
cannot
that messes
believe
people up.
this.
It's
I'm
not
hitting a
technical
down
analysis.
button.
It's not being lazy. It's having an expectation. You come in, and because you saw him making $5,000 a month, I have to make $5,000 a month. You haven't even started learning. You haven't been through the ups and downs. Nothing is as simple as I'm going to start it today and see success.
There is nothing that she has said so far.
You strip yourself of the ability to learn. You strip yourself of the ability to make mistakes. weeks, you strip yourself of the ability to just be a normal human being. Notice how every successful trader will tell you it took them 5, 6, 7 years. Some it took 3, 4, 5. Some it took 2. But it took at least a year for them to see really great success. Even me, my first year trading, I saw a lot of success. I saw a ton of ups and downs, and it was very rocky. My second year, still very rocky. It was very successful, and then in and out, and in and out. I had to take a break from trading because I wanted to focus on the business, and it threw off my entire journey. See, the number one thing people struggle with is expectation. But then, too, they're not consistent. So you trade for 2 weeks, and then you take a break for 2 months. And then you come back for a week, and then you take a break for 3 months. Think trading will ever work? It won't. 95% of traders fail because 95% of traders never actually try.
No, 95% of traders fail because of people like you that say we've got a hidden system. Well, you don't. You fail, but you got lucky.
System is a very systematic approach that you have to take to it, and that depends on what your strategy is, what works for you. Everyone's different. There's no perfect strategy that works for every single person. People don't even give it a year of consistency. They give it a year of here and there, a year of trading groups and copy pasting trades, and it's not going to work. You have to be willing to commit.
She's very good at editing.
I make money off trading. I make money when people decide they want to start trading with me. I made a company with admins.
Yeah, she makes money off of people who want to.
So every time people join, company gets paid because I really don't pay myself, and they get paid. But the thing is, if you're looking long term, you cannot join any group with the expectation that you're going to make a ton of money. Get rid of it. You may. Once you have that expectation, you've sold yourself short. You won't even give yourself time to
So why am I paying you?
see everybody winning. Like, I want to start winning tomorrow. If you want to really win trading, you have to take away every expectation, take away every goal that you have. Because if you don't get rid of it, all you're doing is getting ready to end yourself up in disappointment. I know there are a lot of people that have told you, I started trading and I lost money, but ask them, how long did they learn and how long did they do it? Because I have so many trader friends, and we're all consistently laughing because we're like, oh, how much you make today? 1,000, 5,000, 10,000. It absolutely can lose you a lot of money. The potential to make tens of thousands of dollars in a couple minutes is not seen anywhere else. Mind you, you don't have to market to anybody. You don't have to wake up and run ads. You don't have to start any type of store. You don't have to start any type of business. It's you and your skill put to the test.
Oh my
Trading will teach you
God.
about your mental capacity.
Yeah, she's got tons of trader friends who are like, how much did you make today? 5,000, 10,000. And then she's saying, mind you, you may lose money. What a douche. I honestly can't believe. I mean, she posted this yesterday and she's got almost 17,000 views. Let's see, Gumroad. Let's see. I haven't clicked on the Gumroad one. $15. $36 ratings. So she's only had 36 people buy this fucking thing. Apple. Oh. Well, let's do that. Why is Tanner Thomas laughing at my post? Joe, I think you are. Hold on. Are you an admin? Let me see. I think you're an admin. Add as moderator. Add as admin. There you go. Boom, boom, boom. You're in. You're in. Good luck in understanding this crap. Bum, 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 bum. What was I gonna look at? Oh, let's go to Finviz. Let's go to the screener. So we're going to look at. I don't care about indexes. We're gonna look at fundamentals. And we're going to look at valuation. Well, let's just look at let's look at low PE. Forward PE, we're going to say low. Price to free cash flow. Are we going to find any low with... let's look at... They have high cash flow. We're going to say earnings per growth for the past 5 years. I don't think we're going to find any. Ooh, we are. Return on assets. Okay. You got 3 of them. So you got Albemarle, ALB. Hopefully this comes ALB. This is one that it's a materials. I think this is the lithium company. Manufacturers chemicals worldwide. Lithium, bromide, and catalysts. So here's Albemarle. Its target price is $314. It's trading at $219. It's up 1.4%. You can see reiterated credits underperform at $240. They're kind of, investor plays 7 blue chip stocks to buy for capital preservations. Albemarle selects South Carolina for $1.3 billion lithium plant. This is kind of a hype play. They're selling at $255, at $251. Nothing huge, though. And again, they're trading at $219. So from a long term, I think lithium's around. I think Albemarle's around. If you look at specialty chemical companies and you look at Albemarle, their PE is 9. Look at these guys with 20s. Let's see. We can look at the next ones. We'll sort it by PE. Albemarle is definitely not the least, but it's on the first page of the least. There it is, 11. 11th lowest PE, price to earnings. So there's one. One of the 3. Then, what was it, Build-A-Bear? Build-A-Bear Workshop. Their PE is 7. They're a specialty retailer. They don't have a dividend. They're up, for 1 year, they're up 34%. Down 0.34. Doherty buy to neutral. The average target price is 41. They're trading at 22. Sales all over the place at 20, 23, 22. It doesn't look great when they're selling at that one. I don't think I would not be in Build-A-Bear in this economy. Golar LNG Limited. This is liquid natural gas, I bet. Owns and operates marine infrastructure for liquefaction and regasification of liquid natural gas. Target price is 34. You're trading at 20. It's down 9%. This is just liquid natural gas is getting killed. Golar closed acquisition of New Fortress Energy, leading tanker. I mean, I'm not an expert in liquid natural gas, but a PE of 2.51, a forward PE of 7. They're in Bermuda. Are they on the first page of LNG? Yeah. They've got the lowest PE in the energy space. Did I click on energy or oil and gas midstream? In oil and gas midstream, they've got the lowest PE. Super low volume. But yeah. Golar. So there's 3 for you, Brandon, that I don't think are horrible. It's just, do you want to, look at that? For me, if I'm looking at this week, let's see. I'm going to go all. Insider transactions. Very positive. We got 242. We're going to say, let's see if anybody, there we go. Over 10% dividend yield. Price to book. CAPL. Well, I think under 10 would be better. $13. Nothing that I really like. Let's look at, you know what? Let's look at tech. Can I look at technology in here? Airlines. And I'm using FinViz to try and, because everybody's got access to FinViz. I'm not using TrendSpider. TrendSpider's got scanners too, by the way, if you want to go into TrendSpider. And you look at market scanners, and then this is EMA crossing, the 5-day crossing up on the 20-day. And I can go into the core investments. Let's see if any crossed up on the 5-minute. Nothing in the core investments. Let's look at the, you know what? I'm going to go into the technology sector. I think I can look at technology. Yeah. Let's go to technology. Because I do like tech. Ooh, and there's ton. You know what? Oh, I didn't put Willie's in. Oh, I did look at Intel for Willie. I did put Intel on Wendy. Intel crossed up. What's data flow? Oh, this is a beta. Yeah. I got to look up how to use that one. Okay, it's 10:40. I am going to actually get my day going. Let me see. Zion. That's the regional bank, Zion. Let's run a strategy tester on this one. Is the 65-minute. 28.40 on the 65-minute. But wow, that first, this is today's first candle. It's a 4%. That's a 4% move. Market's trending down. I mean, you're kind of flat. Again, the S&P, it's at 3980. Remember, it was up over 4,000. It just can't hold 4,000. FRC is under 14 again. It's at 1398. Let's look at FRC on the 65-minute. Ah, look at that. You just got to buy. Look at this. Look at this. This is the trend line I drew, I guess on the daily or something. Look at the resistance. Apple split. They just did it in August of 2020. So, if we go back to Apple's a buy on the 65-minute at 159. I don't know that I'd necessarily look at buying it, but if we go to a weekly, and you had, let me see, do I have splits in here? I do have splits. It should show it. There it is. 4 for 1 right there. It was August 31st. And you were trading at about 4 for 1, $500 it seems. So do I think that you'd get anything? I think Steve Jobs had given Tim Cook some direction that he wanted, and this is I think it was a rumor. I don't know if it was a story. I don't know exactly what it was, but I heard Tim Cook had given him some guidance that he wanted the stock to be around $100 a share. Now, when Steve Jobs died, algorithmic and fractional shares were just not huge. I should say algorithm on the big boy side was still around, but I think a split is a long way away. I think Apple would have to be around $300 a share for a split to happen. And today, splits mean nothing. I mean, I think Tim Cook is happy with it around, $100, and you're only at 160. He doesn't want the stock at 80. So, yeah, let's continue. We can continue watching.
Are you able to withstand hard days? Are you able to see through something you truly believe in, even when everything is saying no?
So here's what I think of Kelly OG. I think if you're paying her $100 a month and you've lost $40,000 and you only have $60,000 and all of a sudden you're down to your last $20,000, she is the type of woman that would say, you need to hunker down, you need to focus, and you need to continue to pay me $100 a month. So,
I made a lot of money trading, but I made a lot more money from a business. I can control how much money I make in the market.
Yeah.
I cannot control how many people join my business. When you see my success, know that it is more than just trading, but trading is what sparked it. Trading is what started it. If I never saw success trading, I would never be where I am today.
Right.
I still haven't given up, and I've had extremely hard days. I was put in a position I had to learn how to trade in front of the entire world. It was just a month after
No, you didn't.
I posted a TikTok video, it went viral, and everyone wanted to learn from me. So I had to fast track my learning. I had no expectation that it had to work. I said it's gonna work one day, and I'm gonna keep trying. I'm gonna keep helping people, and I'm gonna put other people in positions of power that can help me be able to guide people that actually know. But you have to know your limitations without setting expectations. My limitation, I couldn't teach everybody how to chart because I didn't know how to chart.
You know what we're going to do? I'm going to go to her team. Let's see. Cash Capital Invest. This is what I am obsessed, by the way, with this. And let me see. I'm costing them money, by the way, for their... And I'm going to move you over real quick because I am going to go on. I'm on the Facebook page now. I was doing some Google searches, and I didn't want anybody seeing something that might be a. Oh my God. They got good graphics and stuff. See, this is Serena. Had a 100% accuracy rating. Every single one of our plays were profitable. Let's see if we can close out this week similar. "94 reviews. Let's see. About. Let's see. March 23rd at 7:55. October 10th. It's all crypto stuff. That's awesome, Larry. Here, let's see. FRC, remember I said, this one's just going nuts. But here, I think 1242 is your absolute bottom. I think that's put in a pretty good. If you get below 1242, just cut your losses and lose. Your absolute top looks like it's about 17. I mean, it's based on a 5-day kind of trend. If we go, let's see. I don't think it's going to let me know. It's not going to let me do a 5-day, 10-day, 5-day. Yeah, you get back, a 10-day, you get back below there. Let's go back to Safari. And here. If we go FRC here, on the 65-minute, see, it really is kind of ugly, but the first candle has confirmation above the 1394 was the buy-in. You've got confirmation above the 9-day. So you do have confirmation on it. I haven't bought in. Maybe I should buy in. You're going up. Larry, you're going up. Just realized the last 3 buy-ins were negative. 10%, 22%, 5%. Larry, I'd have an alert at 5% below 1393. So what? 1370. I would have a 1380. I would have an alert down there. Or no, 12 something. Ignore me. What's 10% below 1393?
I found this on the web.
Oh, it wants me to do calculation. I would have a 10% or 5% probably alert, and you can make your determination whether you buy more or you sell. The 65-minute, the problem is that it's been so volatile. I mean, this one candle, 65-minute candle this morning, had a 14% range below 1380 to 1638. And on Active Trader Pro, on the 5-minute that I like to trade on, you still really don't have confirmation. You're not above the 9-day. So see here, Larry, I'd be slightly concerned about it coming down to 14.13 now. Because you're not above that 9-day. Put in a sell for 14.20. I think you'll hit it. Scalp it. See? You would have gotten out now. And I think you put in an order for 14 now. Once you sell it, you put in an order for 14. I think you'll hit 14. Then I think you sell it at 14, Oh, what was I going to do? I was going to look up here. And that's the only reason I would be slightly concerned, Larry, is because I'm going to take out Nez. Yeah. Oh, I'm still on Cash Capital Invest. What apps do I need to get started? Robinhood. They do not offer refunds. That was one thing that I heard. Shop our merch. Testimonials. I'm obsessed. Obsessed. Yeah, not good. Should I join this group? I think I'm going to get spammed to death on this group. I should contact them and say I'm interested in partnering. Yeah, see? Larry, 1420 was the sale point, I think. I think you'll hit it again if you want to put it in. But I think 1420 is your sale point. 1394 is a good entry. 1420 should be your sale. And I think you just buy it in that fucking range until it gets out of that range. But you can see here this. I'm sorry. I should go over to Active Trader Pro. See this volume range 1438 to 1462. That is the majority of sales for the past 2 days. That is just sticking out there, and I think it's a magnet. Yeah, Larry. This is gambling. Okay. I am out. I am done with Cash Capital Invest. I was looking up on LinkedIn. I found out all of these guys are University of Houston students. Nobody seems to have work experience. So, hey, they're doing what they need to do. I was on LinkedIn looking them up. Okay. I'm going to leave that up there. Report. Okay. We just reported someone on Twitter. I gotta block them too. I'm gonna do this. Block. Okay. We'll close that. We'll close this. Boom. I can get back in. The only thing that scares me about that one, Larry, is you could, 1394, I think like I said, anything in the 13s, I think you're okay, because I think at some point it's going to 15 or 16. But I would hate for some news to come out that they're not backstopping it, and then all of a sudden it's at like 12 again. I'll check it's 11 o'clock. I gotta go. Man, I gotta do something with my day. Lemonade stock has reached a new 52-week low. I am down 0.25%. It's Apple. I think it's Apple. Let's see. Yeah, Apple's down 0.34, so I'm going to be down about that. SI? What's SI? Silvergate. Silvergate's trading again. It's up 30%. Let's see. MicroStrategy prepaid approximately $161 million of their loan. Silvergate agreed to accept in full repayment satisfaction and discharge the term loan. Huh. So they're up about 27%. Yeah. I question whether Kelly OG. I mean, like she was perfectly honest in this when she said she makes more money through her business than she does trading. So she was completely honest. Just, she bothers me. She really does. I don't like people that do that. Top trading edge. See you, Joe. Enjoy the lake. Have fun. It's a lake in my backyard because it's rained so much. Ice Cream Man double murder retrial. Wow. Man, there's never. Jury in the courtroom. Where's the Ice Cream Man? I love you.
We're going to get to the request in just a moment, but before I do that, this is my first opportunity to have contact with you this morning, so I will ask you the question that I've asked over and over when we see you again, and that is, did anyone discuss this case amongst themselves or with anyone else? Now, there's a caveat here. You obviously can discuss with each other while you're deliberating, but between the time that you left on Friday
This is the
and
most.
the time that you returned this morning, obviously when you returned this morning and went into the jury room, you were expected to discuss the case amongst yourselves.
I don't want to watch this. Okay. I'm out, fellas and ladies. See you guys later.